Good afternoon, all of you. Renisha from Commodities Research. I'm here to present my views on commodity for this week. Commodities were generally down in the last week because part of sell-off was due to correction from previous gains. The key reason was that the investors were worried that China will step up tightening measures after robust macroeconomic growth in fourth quarter 2010. China reported that the GDP growth accelerated to 9.8% in fourth quarter 2010 from 9.6% in the prior quarter. The reading was also higher from the consensus of 9.4%. The market currently expects that the China will raise rates in February or March, and a rate hike before Chinese New Year, that is starting from 3rd February, will be an early surprise. Recent data of US also suggests that the pace of recovery remains intact, and this has raised speculation that the low rate environment is near its end. Strength in dollar and bond yields signal that the market has turned more optimistic towards US economy, and further needs for quantitative easing are limited. Strength in dollar and yields are negative for bullion. So gold and silver prices slumped last week amid dollar strength and worries about monetary tightening. Declining over the past 3 weeks, gold has now reached the lowest levels in 2 months. Silver also after hitting a record high of $31.2 at COMEX in the first week of 2011, is sharply down 10% from its high, and it has fallen from $31 to $27 in the last week. And while a further correction cannot be ruled out, a divergent US coin sales and ETF investments have blurred the metals outlook in the near term. This downtrend will continue as investors and traders continue to log the significant gains from the last year, but keeping in mind that the bigger picture of gold and silver still remains bull intact. A short covering rally was seen today, and this has tempered early losses, and the high range close sets for a stage of steady opening today. Stochastics and RSI were oversold, but remain bearish signaling that the sideways to lower prices are possible in the near term. Gold has now the target of 19,800 and 19,400 in the near term, while silver has support at 42,000 and 40,000 in the near term. My view is to sell on rallies. Base metal complex stacked a broad-based correction last week on the concerns over the stringent tightening in China, with copper prices down by more than 2%. During the beginning, expected then lower numbers of housing start weighed on prices. However, Germany business confidence and China growth numbers help base metals prices to recover. In the next week, I expect base metal prices to consolidate at current levels until the Chinese New Year is over, whereas in copper, buying from the lower level is expected. Nickel prices are expected to trade sideways, and I expect prices to trade above rupees 1220 rupees in the next week. While lead and zinc may see some negative cues during the beginning of the week, and lead and zinc prices have currently a spread of rupees 6 at MCX, and which may expand to rupees 10 in this week. Crude oil futures declined more than 3% in the previous week, and it is down from the 4 consecutive weeks. Prices settled at around $89. Crude oil prices continued the downtrend on stronger dollar and the high debt concerns in European Union, and the inflation fears in Chinese economy. Mixed economic data and weak global equity indices also pressured oil prices to trade down, backed by the bearish inventory data. I expect crude prices to trade down and may see some downside near $86 levels, and after that a short recovery in the starting of the week can be expected. Natural gas prices are expected to trade higher on cooler temperatures, and the target is $5.1 for the next week. This week will be an eventual one with European PMI for January will be released later today, followed by UK's GDP and public finance data on Tuesday. The Bank of England will release minutes for the January meeting, and we expect a three-way split again. The FOMC will be meeting for monetary decision in this week, and I expect to keep the policy rate unchanged. So this is all from my side. For more details, please read to our commodity weekly report. Bye. Happy trading.